Hey Fidelity Fortune Hunters, Tom Wilmot. Welcome to our series on Fidelity's Active Trader Pro. It's been our goal in this series of videos on our YouTube channel, Vineyard FX, to show you where some of the optimum indicators that we've transferred over from our Forex world can be used to really nail the best entries possible as you watch the market, either in your self-directed IRA or in some other kind of swing trading account. So in this particular video, we're going to review a number of different symbols that have shown some action over the last several weeks. We're going to take a specific look at some different time frames than we've used before, and we're going to show you also not only how the RSI works, which you see on the chart behind us now, but we'll introduce stochastic again and show you how you can get the best bang for your buck out of that oscillator as well. So if this is of interest, hang on to your hat. We'll get started right after this. Okay, welcome friends. We're going to take a quick peek here at the ExxonMobil chart, and for the first time in our videos, we're going to actually check it out on a weekly basis. We've changed our configuration and time very quickly here by simply clicking on weekly, and that brought up our chart in the weekly time frame that goes back now till all the way back till the July of 18 time frame, when we had these kinds of highs for ExxonMobil, which were up in the mid-80s, in between 80 and 90 dollars a share. Now, as you can see, things began to fall apart in 19, all the way here into January of 20, and then, of course, the pandemic hit, and off we went to the downside because everyone was concerned that consumption of energy was going to fall off. Certainly air travel and all the rest of it, car travel, was going to be difficult during lockdown periods, and people simply weren't moving around as much. Now, I wanted to bring this up because you can use this if you're a buy and hold kind of person with your swing trades. You can see here, you can move into the bands, you get almost to the 47 EMA, and then this is a great signal if you have a higher high, and then you have a complete fall off, a turnaround, a lower low on this candle, a higher high than the previous candle, and then a fall off. That's a pretty good sign that you're going nowhere fast to the upside. So I would put my stop right at the top of this candle, and then I would wait for this eventual pull to the downside. Now notice we formed a bottom, a double bottom here, and then as the vaccine came closer and so forth, we began to have some optimism move back into the market with the potential for economic activity picking up and travel and all the rest of it, and as a result, the oil prices popped back up into the 60s. So that's the situation that we find here. Now, there isn't much to trade in this area in particular on a weekly chart. We're going to drop down in just a minute to see what happens in the daily, but for the time being, let's just review that this was an important signal right here. And also, if we come down and use our history viewer, let's try to open this up a little bit, even more than before. And notice back here, we're in the situation where we have the same kind of thing. You can't see it because of the bands, but we had a narrowing of the bands, a compression here, a higher high, followed by that rollover, and there we go to the downside as we move into this particular area. Now, if you were to pull this up on the daily chart, we'll try to make it even a little bigger here. If you were to pull this up on the daily chart, you would probably find that in this 2-week period right here, you had that kind of rollover action. And obviously, you know that with the higher time frame, the weekly, pointed to the downside with our multiple moving averages, you want to be very cautious about being long. Okay, now before we switch to the daily chart, let's just make a note that this high point here, which is our big move to the downside, our second one down to the double bottom, was occurring back in about the first week of June in 2020. We'll just make a note of that, and then we'll see what that looks like on our daily chart, okay? So here we go. We're going to go to daily. Now, what we have to do here is to, because we're not going, this is the July time frame, and so it's not quite enough information on the chart to show us back to where we had that particular situation. So here we were, and this actually, you can see here, is 6/01/2020. This was that move to the north, and then this falling off on the daily chart. Now, let's get rid of this so we can make things a little bigger, and we'll sneak this down a bit so we can see what's happening. And so now what we have is a situation where this is the daily move. Notice that we had this great candle configuration here back in that June time frame. We had what would be like a wonderful evening star candle configuration here, up, a doji at the top, and then that fall off that we're talking about. Notice here again, one of those candles. Let me see if I can make it just a little bigger before we get on to talking about the next thing here. I'm going to move this over, squeeze, and then we're going to move back in time over here to this area so you can see it a little more clearly. We'll get rid of this. Notice here we had a candle that was a higher high, but then a reversal candle. It's higher than the previous candle. It's up above, but then it stalls brilliantly. This is a great configuration that you can use in your candles in combination with your multiple moving averages. You can see here also that the RSI, let's open this up a bit for you. You can see here that the RSI stalls also, doesn't really take out the 45-55 band, and then falls down into this area, a pullback after that. Here's this particular stall period as well on the daily chart. So all of this gives you an opportunity for some nice swing trades, some monthly option kind of contracts that you could play around with to optimize where you want to be. And so I really recommend this particular candle configuration kind of thing to you. Even though here we have an upward move on the daily, notice that peaks, and this is a very big signal that you should be very careful what's happening now, even though you want to wait for the downward trade over in this area here. Okay, now what I wanted to do was to open this up just a little more, because what we'd like to do is to just make this a little better. I'm going to pull it over here, and then we're going to move this back in this direction. We've got to do it this way so that we can get some candles on here, and I can show you one other thing. Here is what I wanted to show you, this particular issue. Number one, notice here that this is the next best trade setup. Once you've crossed over on the daily, this compacting of the compression and compacting of the bands without breaking down, that's a beautiful trade location. Likewise here, right before that earnings report that really sent us higher, notice again that we've got a nice situation going on. Let me make it even bigger. We'll pull it over here and open it up. All right. I'm sorry, I'm going the wrong way. Sorry about that. Hang on one sec. Make it a little bigger. Okay, here we are with this one. Now we'll get rid of this down on the bottom. We'll pull this back again. I wanted to show you and introduce again, as I promised, stochastic for you in this area. We'll go to indicators. We'll go over here to stochastic, which I use the slow stochastic, and I just leave the particular settings that they have, which are 14 and 3.3. Okay, this is the, if you want to delete it, you delete the first one. These are the follow-ons. Now notice in this area, I'll pull this down here for you, and we'll come up so you can see it clearly. Notice that when you had this compacting on the daily chart, and I would use it in this time frame, notice that the stochastic turned around, the lines crossed, we were down here at the 20 level and we came back up. Notice this next one was the same, right prior to that earnings report. Reversal, and then you're off to the races, and the whole time you're in this area here, you're making some moves to the upside. You'd come down and dance on the 12 EMA on the daily chart, but still in all, you're in pretty good shape to the north. And from this particular area down in here, we were in the high 40s and we've moved up into the high 50s. So that's a 10-point move since the beginning of February only. So that's the kind of trade setup you're looking for. You can obviously see that once you have these reversals, the lower low with the reversal on the upside move, that you'll want to watch this. You can also make sure that your RSI behaved okay for you, and notice it did as well right down here into the 45. So this is a place you can be watching for sure, and you may be even able to put this into your watch list and screening technology with Fidelity if you experiment with that a bit. But certainly this is the area with the compacting and compression of the bands. You get the slingshot approach. Okay, take a quick break and we'll be right back with one more idea. Okay, now I'm going to get rid of these two oscillators just for the time being, because I'd like to save some screen space for you on the YouTube video. So here we go. We click on this arrow here. We can modify or delete this. We come over here with a left click and hold to delete, and double click again. That gets rid of the stochastic. Now in the case of the RSI, we can simply go here and find our double-sided arrow and bring that down and just squeeze it. So now we have some ability to take a look at this in greater relief. And what I'd like to do now also is to pull this back this direction. And notice here we have that high that was back on the 1st of June of 2020. This was that peak that we talked about in the previous section. Now, remember what we did also with our Fibonacci. And we talked about how the Fibonacci tool doesn't do extensions in a continuation pattern, but does retracements quite nicely. Basically, what you do is you grab that tool, which I just did up here in the drawing tools area. I'm going to come to this position here. I'm going to left click, and I'm going to move down into this area here. Okay, now what I'd like to also do is kill the history viewer. All right, now what we can do, because I hate this purple color, we're going to come here and we're going to change it. I simply left clicked on the button that appears once you select it. I'm going to change it to yellow. Okay, this could take some fussing around because finding these sometimes is a little tedious, but no matter. Now what we're going to do is snap to price. We're going to delete that 23.6. We're going to leave us with 38, 50, and 61.8, which is sort of the golden ratio. And we're going to apply this now. And that gives us our upside. Now we can come here and we can fuss with it and just bring our thing way up high. Hopefully you got to fuss with it a little bit to get up higher. Get above this candle. There we go. And the same thing down here, but we'll leave that one just for the time being. It's close enough for horseshoes and hand grenades in this area. And if you get too close to this line, which is where you can move, I found it's difficult to play around with it. So it's just it gets too close for comfort down to this area. So sometimes it's hard to grab it on this end. But in any case, now what I'd like to show you, and I think it's important for you to know that these 127 and 1618, which translates into the 162 in this area, is a very nice way to try to figure out what your targets are. Add value and apply. And just by miracles, look where we headed on this move to the north, right up to the 127. We obviously haven't gotten to a 1618, which would be up in this neck of the woods, but it's possible that we could be headed there with Exxon as we expand and as energy prices increase over the spring. So that's something to keep your eye on. You obviously want to wait until you're in the bands. You don't want to be buying up here for sure. That's a target for you. But also notice on this chart how we can see this compression of the bands again around that earnings report. And notice how nicely this was all coordinated with our middle area here, the 38 through the 618. Notice here that also if you watch your 47, your 47 EMA kind of tracks up through this area. That gives you a lot of hope that even though you came plummeting back from this area prior to earnings, this was a great move also potentially to the north. And I suspect if we ran another set of Fibonacci's, or if you do this in practice, you could run from here down to here, and then you'd find yourself up in a 162 position, maybe twice this move. The 200 would be twice this, so it would be up and this direction. So you want to try a number of those ratios, 262, 162, and so forth, to try to see where your target areas lie. Okay, let's take a look in the next section as we wrap up with a couple of the other symbols that we've enjoyed watching, just to see if this ExxonMobil is kind of an anomaly. I don't believe it is. Let's see what happens next. Okay, we'll wrap it up by taking a look at a few other, maybe half a dozen symbols, just to see how we're doing with our template. Notice this is the SPX, and it's still a daily chart. Notice again this wonderful compression with the reversal that you get. Sometimes the low of the previous candle in this case is lower than this one, but this is a nice reversal situation. We could take a look at this. Let's see if we can put a line through this area here, just so we can keep track of where it is, and that would be down in this area here, and it was on the 1st of February of this year, 2021. So if we come down here and we go to, actually I'm going to show you here, I've saved up in this area 195-minute multiple moving average default chart. And so let's come down to the 195. Notice that on the lower time frames, you can breach this 47, you can breach the 45.55, but you can also see here's your candle. This is that nice move that we saw in the other direction on Exxon, a low, a doji candle, and then a reversal to the north. That's a beautiful symbol that takes you all the way up. You can wait actually until you cross back up over the 12 if you'd like, or you can drop down to an even lower time frame. But obviously your stop is going to go in this area here. That morning star candle configuration is a beautiful one as well. Here's another nice move, all off of this. Now, because the interest rates have been spooking the market lately with the 10-year going up over 1.5%, we've had some downward trends, but then we've popped back up again. Notice here these two wicks, obviously very important to moving to the higher. Now what we're going to do is switch around. Let's find a couple of others. I want to show you the gold has been a real nightmare lately. Notice this chart to the downside here. I'm going to open it up a little bit more, and we'll drop it in. This is a 195-minute chart. Once again, notice the compression. Great short entry with a put or something of that sort if you have the interest in options. You're in a situation where that's a fantastic move of compression. You don't burst through this. Now, let's just see quickly. I hesitate to keep on driving you crazy with these things, but let's go back over here to stochastic slow and notice here another thing. Up we go, almost to the 80 point, and then a rollover. Notice that when that red crosses back down through and is below, then you're in pretty good shape. That's just another confirmation for us on the stochastic that we're thinking right here, and we have got a potential for a nice trade setup. Okay, let's see what happens here with Walmart. Walmart was in a position also where after the first of the year, here was that quarter in the move into earnings, but then a fall off in the first of the year as people worried that the economy was going to be in tough shape and maybe the economic recovery wasn't going to happen so quickly. Again, also here after the earnings report, a big move to the downside, and so that's on the 195-minute chart. We can see that the retailers have been under some pressure here prior to the stimulus program being rolled out. Okay, the financials have done fantastically well over the last period of weeks. And notice here we had a pullback after earnings. We had a nice run into earnings with this. This is a great trade setup you can use. Couple 3 weeks out from earnings reports. If you have these upward facing thing, that's an optimistic view of how the earnings are going to come out. You don't want to be playing the day of the earnings, but you can wait and then see the recovery that happens here. And off we go to the races to the north. Let's open that one up as well. We'll make it a little fatter. Here we go. Now let's see what happened if we go back to the daily chart on Morgan Stanley. Notice how we pulled right back to the 47. So if you're looking to use the 47, you may want to experiment with other time frames, other inputs. If you use the 195-minute chart and find one that tends to drop down to this level and then reverses. Here's your reversal candle here up above. And then these actually compacted on the daily chart, and we had the 12 slipping below the 24, but this recovery really helped to move us back up into the March time frame. One more. Let's see what happened here, because all of the technology stocks have been hurting. I'll do FedEx for you. I'll come back to the others. FedEx also around the first of the year falling off down to a slightly lower low into this area here off its highs up in the $300 level. And let's just check a technology stock because the interest rates have been very tough on them. Here are the Qs. Let's take a look at the Qs. And notice since the big 10-year bond issue, we've had a lot of trouble with the interest rates, and the interest rates are particularly impactful on the technology sector. So here we go down into this area, pull back, but notice here, too early on the daily chart to get back in. I would say this is not an area where you want to be a little careful of this area because your bands are downward pointing here. Now, if you drop up to the week or move up to the weekly, you have an opportunity to check it out in different dimensions. But here for sure, our nice template really helped us with these moves, whether they'd be on a weekly options basis or a monthly options basis. That's the kind of choice that you're happy to make on your own. Okay, guys, I hope that's helpful. A quick review of where we stand on Fibonacci, on our multiple moving averages, and on 2 oscillators that we like to use occasionally to check our progress and our perfect trade entries in this very volatile market. Stay tuned and subscribe if you would to get alerts on new material. We'll try to keep you posted as best we can. Thanks for watching.